Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about Sofi Technologies SOFI stock to determine if this is still a good company to buy, considering the deep discount that its stock is trading at right now. As usual, we're going to be going over the latest news updates, and we're going to be going over the latest price targets for the SOFI stock. On top of that, we're going to go and look into two other articles by Motley Fool, where this particular author says that Sofi Technologies is literally their number one growth fintech stock to buy, and that he has a very high conviction into the company, and we're going to determine and discuss why that is. Then lastly, we're going to go over and talk about why the SOFI share price is falling right now, and how it could continuously fall at least until a catalyst or until the stock market ends up flipping and stocks start to appreciate again. So for more SoFi stock news videos, remember to go and smash that like button right now, comment your thoughts down below about the SOFI stock, whether or not you like SoFi stock and you want more videos on it, or if you want me to report on other stocks. Remember to subscribe if you are new, and without further ado, let's jump right into today's stories. So right now, the current SOFI stock is trading for around $5.94, and this is because recently, the stock price has lost around 65% of its value. If you didn't know, Sofi Technologies is a fintech company, and they offer an all-in-one inclusive digital app where they offer their consumers anything they could probably need in terms of financial services and or financial products. Now, the SOFI stock price is not the only stock that has fallen as of 2022. Many other fintech companies, growth companies, and technology companies, along with their attached stock prices, have all actually fallen from the beginning of 2022, which many analysts and professionals believe that eventually the companies in these particular categories are going to make a huge comeback, which would include the SOFI stock. Now, some notable names in this particular bullish mindset is the CEO of SoFi and the CFO of SoFi, which is the Chief Executive Officer and the Chief Financial Officer, as well as other analysts. For instance, an analyst actually said that we remind investors that the CEO has built the business during a very choppy environment, and he is confident that he can do it again. The analyst goes on to say, we continue to believe that SoFi's diversified revenue streams, durable business model, and Galileo's business as a service offerings should benefit its fundamentals in the long term, end quote. And overall, I 100% agree with this analyst. Because even during this very bearish negative time for the overall market, we can see very strong demand for SoFi's loans and other products that they have been offering. Clearly, SoFi is a very resilient company, which the analyst rightfully points out that this company has actually shown great resiliency across cycles. So basically, regardless of the market cycles that the market is going through, Sofi Technologies seems to be fundamentally very solid. However, Sofi Technologies does have some constraints, and the author does talk to that by saying that the main constraint on SoFi's growth is self-imposed, as they only approve approximately 30% of the personal loans despite the ability to approve more, end quote. So basically what the analyst is saying, that although Sofi Technologies has seen great success for their loaning business, they're only actually letting through around 30% of the people who apply for personal loans. And although, yes, they could actually end up taking on more risk and giving more loans out, which would generate fantastic revenue for the overall company, the company would rather identify very high earners and people that are basically guaranteed to pay their loans back. So even though Sofi Technologies could be very greedy and give loans to even more people, which would help the overall business, they are fundamentally targeting a core group of young high earners, which are always going to pay on their loans so they don't default. However, during a time of a major uncertainty, Sofi Technologies could always increase the amount of loans that they are actually giving out, because right now they are approving less than 1/3 of the people that are applying for loans, specifically personal loans. So what does this all mean for investors such as you and I? Well, right now, the analyst above who made the comment comments that we just went over, actually has a $9 price target, which is clearly higher than the $5 to $6 current stock price for the SOFI stock. However, if we take into consideration other analysts, they actually have a moderate buy rating on the company right now, which to me is very bullish. The average price consensus for the company is around $10.23, which would equate to around a 72.51% upside from the stock's current price of $5.93. However, even on the low end price target for the next 12 months, the company is set to at least be worth or reach $7 per share, and on the high end, if the most bullish analysts and investors are correct, we could see this company surge all the way up to $20. Now, this really depends on the reverse stock split, and we're going to get more information on the reverse stock split on July 12th. So many investors right now are either selling the company because they anticipate a reverse stock split, which is going to negatively impact the overall SOFI stock price, or if the reverse stock split is actually not done and that authorization is not given to the company's board of directors, this could actually act as a catalyst temporarily to increase the overall stock price. Right now, as far as analysts are concerned, the majority of analysts are very bullish and positive on the company, with 7 of them saying to buy the company right now at the current stock price of $5.93, especially if you plan to hold either a year or longer. But with that being said, there are around 4 analysts that just say to hold the company, with none of these analysts saying to sell the company. And this is actually a very good reflection of what investors are thinking about this company. Not many investors are selling the company right now. The majority of investors are either holding until July 12th to determine what the company is going to decide for their reverse stock split or their potential reverse stock split. But other than that, the majority of investors are actually pretty bullish and positive on the long-term price appreciation for this company. Now, you all know me. I think that the company is really going to show its true colors past 2024, which is why I am buying the company right now while the stock price is below $6 per share, because I'm betting that in 2024, when the company is projected to become a profitable company, it's going to come in handy and the stock price is going to surge from then on. However, that doesn't mean that the current stock price can't fall any lower, because I do believe that could happen, especially considering that the current stock market environment is very negative right now. So as far as this Motley Fool author that we are now going to consult, he is a huge growth stock enthusiast and he really likes Sofi Technologies, and he thinks that this company definitely fits the bill for a long-term growth company that's going to reach its potential upside, and right now it's very compelling to buy this company at its current stock price. He goes on to say that the stock price is very compelling right now, and it's time for the company to prove itself. And because Sofi Technologies is fundamentally solid and they have a very strong business model, it wouldn't surprise me that they could actually somewhat flourish despite a negative environment. For instance, they do own a bank, which we covered many months ago. They do own an official bank, and they have added new products to their portfolio, as well as their balance sheet is in very good shape. This particular author is so bullish on Sofi Technologies that it makes up his second largest bank holding on a cost basis. So clearly he has high conviction in this particular play. However, I am more than willing to bet that his first bank holding is a blue chip company, probably something like JP Morgan Chase. But regardless, it's really good to see how this company does have backing from both investors, institutions, analysts, as well as financial reporters, which would include myself. Now, lastly, let's discuss why the SOFI stock price continues to fall, even though nothing has really happened to the stock individually. There has been no real good news or bad news, yet the stock price continues to fall. At least today, the stock price has fallen by around 3.26%, and there is no obvious reason or news about or regarding why the current stock price is falling. The basic assumption here is that the stock price is falling with other fintech companies, growth companies, and technology companies because the overall broader market is still selling off. And like we said in the beginning, this is not just Sofi Technologies selling off. A multitude of fintech companies are selling off right now, and to me, I am using this giant sell-off as a buying opportunity. However, I don't think that we are out of the woods yet. I think we still have many months of a continuous downtrend in the stock price, but instead of selling my current stocks and trying to time the bottom, I am dollar cost averaging into my high conviction plays and ETFs that I most hold to, which would be VOO, VTI, and QQQ. QQQ or MTUM. Surprisingly, the NASDAQ composite, which is basically reflected in QQQ, they are still up over 5% as of the last 5 trading days. However, despite this, I don't think that this is going to last long because we still have major fears over inflation and rising interest rates. Right now, the inflation has not flatlined yet, which means as the Federal Reserve increases interest rates in the prime rate, it has yet to actually stop inflation as of right now. And this is why I, as well as the author of this article, do not think that the sell-off is done quite yet for growth companies and fintech companies, or just technology companies in general, which is why the SOFI stock price could definitely go even lower to around $4 per share, especially if they do end up instituting a reverse stock split. But once that reverse stock split does happen, and they actually perform a reverse stock split, we could see the stock price go all the way up to around $40 per share, depending on what type of reverse split they end up initiating. For instance, if the stock price falls to $4 per share and they do a 1-for-10 reverse stock split, that means that the new stock price is going to be around $40 per share. But the funny thing is that rising interest rates really shouldn't impact financial institutions as much as it will other growth companies and technology companies. For instance, at least for financial institutions such as banks and fintech companies, specifically Sofi Technologies, which both owns a bank and is a fintech company, they will actually get to increase their interest rates in this increasing interest rate environment, which is going to offset some of the cost of the rising interest rates. So overall, this is kind of positive. They do have a slight hedge here and an advantage over other technology companies. However, overall, Sofi Technologies is a very strong business. Fundamentally, they are solid. Financially, they're amazing. And even though their student loan lending division has been hit very hard as of late because the student loan moratorium, which says that borrowers don't need to pay back their federal loans and it doesn't accrue interest right now, Sofi Technologies is still very resilient and they're holding on. And eventually that student loan moratorium will end, which is going to cause a flood of people to rush to Sofi Technologies to refinance their student loans. Now, if they were really smart, they would have done that when the interest rates were low, and time is definitely against them right now. However, because the majority of people are major procrastinators, they're gonna wait until the student loan moratorium actually ends, which is going to produce a flood of volume and customers pouring into Sofi Technologies for Sofi to refinance those loans at a cheaper interest rate than they are right now. So to me, that's going to be a very large catalyst that we can look forward to on top of profitability, hopefully by the end of 2024, and the catalyst or potential catalyst of them not performing a reverse stock split. But we're going to have to wait until July 12th to get that actual answer. So overall, the author of this third article actually says that this stock is a long-term buying opportunity because he really likes the business that the management is building, and I 100% support that. However, if you are not willing to hold this company for 5 years, you probably shouldn't invest into growth stocks, because the whole point of a growth stock is to buy now and sell higher at a much later point way in the future. But I would love to hear your thoughts down below. Remember to go and smash that like button right now. Comment your thoughts about these approaching catalysts, the latest news updates, whether or not you think they're going to actually initiate a reverse stock split. Subscribe if you are new, and I will see you in the next YT video.